Well, welcome to Leading Voices. I'm Laura Nix Gerson, Director of Women in Worth, and we're delighted to welcome you to this monthly series where we're featuring groundbreaking women like Jessie and Julie from our community who are leading the charge when it comes to building a more equitable economy for women. That being the key point. In addition to the series, we're hosting events throughout the year. Our annual Women's Summit is taking place in New York on Wednesday, April 26th. And you can find more information about the event and speakers online. We're going to drop it into the chat for those of you who are joining us today. At Women in Worth, we want to help more women reach those C-suite and the boardroom. We want to see more women build thriving enterprises and have the confidence and resources to make decisions when it comes to investing. This includes investing in female founders, which is something the three of us here today are all very passionate about. But for many of us who don't know how to get started in investing or how to support those who are, over the next two sessions in Leading Voices, we're going to be delving into this topic. Today on Leading Voices, we're talking about investing in the future of care. I'm thrilled to be joined today by two of my fellow Angelinos, Jessie Draper, founder and general partner of Halogen Ventures, and Julie Wroblewski, co-founder and managing partner of Magnify VC. Hi, ladies.
Hi.
So glad you're here. Well, each of you take a minute to introduce yourselves and tell us a little bit about your background and your funds. We'd love to learn a little bit more about you. Who wants to start? Julie, you want to go first?
Sure, yeah, I'll go. Thank you so much for having me, Laura, and being part of this community. I'm Julie Wroblewski at Magnify Ventures, and we're an early stage venture capital firm investing in the care economy, the future of families and family tech. I've been an investor for over a decade. Before this was with institutional scale family offices and mission-oriented organizations. Most of that time I worked with Melinda French Gates and Pivotal Ventures, both on the LP side, so investing in funds and directly into companies and creating partnerships, and launched Magnify last year with my partner, Joanna Drake, really because we saw a huge opportunity in the market to invest with a thesis focused on the future of care and families.
That's great. Well, thank you so much, Laura. You have been so supportive of everything I've done for years, so I'm grateful to be here. I'm Jessie Draper. I run Halogen Ventures. We invest in early stage female-founded consumer tech. One of our verticals is also the future of family. We did a big study around, what women are missing, what families are missing, what they're willing to pay for. And what their biggest pain points are, and found, similarly to Julie, an enormous opportunity and definitely a hole in the market, the largest hole, I think, because it's completely underfunded, which also means it's a really great opportunity to create wealth for women. And so we invest in future family, consumer healthcare, and also fintech. We have 70 companies across a couple of funds. We've had 10 exits and sold companies to Walmart, P&G, Twitter. We have a company called Babylist in that future of family category that's about to go public, which is very exciting. And that's a little about me.
It's so incredible what you're both doing, and Jessie, you've been trailblazing out there for a lot of us for some time, and Julie as well over at Pivotal. So I wanted to touch a little bit on what that term means, the future of care or the future of family. Like, what are we referring to when we're talking about that? Because I think that's kind of a relatively new term we've seen in the venture community in the past couple of years. And I thought we could elaborate a little bit on that and how that fits, why. And Jessie, you just talked about why you're focusing on the statistics behind it, but maybe we could elaborate on it a little bit more.
Yeah, I'm happy to jump in, and then Julie, just totally interrupt me because I know we're both very passionate about this. I was actually really, we're going into our third fund right now, and we've been out there raising, which I can legally say because we registered as a different type of entity this time. Usually you can't talk about it. And when I think every fund, you kind of look at the market and say, okay, well, what am I focused on now? And so coming out of the last fund, I said, hey, we want to solve childcare. This is broken. We have a bunch of companies like WeCare that has 55,000 in-home vetted childcare locations, making it more affordable for the 0 to 6-year-old to like have childcare across the country. And Binti that's putting adoption online. And we have these companies that are doing incredible in this space. I want to double down. And I actually got a lot of pushback from investors. They were like, is childcare really a big enough market though? And I was like, well, you know, it's 500 billion, but
Right.
challenge accepted. And so that's why we did this study, because I felt like I had to prove out this opportunity because we, like Julie and I can't be the only people funding this opportunity. Like these companies need money to grow. And, you know, really, I think that's going to come much more, I hope much more from women, like many of the women out there listening, you know, in traditional venture capital, like, yes, they're betting on like the sun and the moon and the stars and the spaceships and the blockchain. And like, we look at all of those things as well. But I think this is the most underfunded opportunity. And when there's an underfunded opportunity, there's opportunity for the biggest returns. And so we proved that out, did this big study and realized that future of family is a $7.5 trillion opportunity. So I went back to those investors and happily shared our study.
That's great. And I love talking about this with Jessie because I always learn things new. I think that's the great thing about being in an emerging category is we're still kind of defining this space, and the language that we use to describe this is evolving all the time. You know, just going back to your question, Lauren, how we think about care specifically as a piece of sort of the future of families, we really define that as all the time, energy, and money that people put into caring for themselves from the time they're born until end of life. And we worked with our partners at the holding company to do some research on this as well, specific to the care economy, and sized that market at about $648 billion in the US, which is larger than pharmaceutical.
Wow.
Just huge. So similar to Jessie, it was very nice to go out and to raise a fund. And thanks again to our partners at the holding company for leading that research. But, you know, when you step back and look at the care economy as a whole, you know, there's even individual pieces of it that are big opportunities in and of themselves. So $136 billion in infant and child care, $151 billion in care for aging adults. So even when you take the individual pieces of whether you're talking about the care economy or whether you're kind of thinking about it as the future of families, this is a huge market opportunity and incredibly underinvested in, given the need and the amount of money that's spent in these spaces.
It so predominantly affects 50% of the population, you know, women. So, you know, when we look at what's happening, I think so many of us, we are dealing with the child rearing years, you know, we're looking at how that's affecting the economy and how that's affecting our work life. But then so many of us, as our children get older, now we're looking at aging care and we're looking at our parents and what's happening with our parents. And then we're thinking about our own, you know, our own aging process and what's going to happen to our care as we get to that point. So I don't know if you think this is true or not, but I find that so many women are the problem solvers in these arenas. They're the ones coming up with these companies and creating solutions. I mean, there's definitely men that are founding these companies as well, but I think that from what I've seen in my experience, there's been women tend to solve the problems that women are challenged with, right? And which is a great thing. Although it's challenging when you're going in and you're pitching for funding, because then the people you're pitching aren't necessarily understanding the problem that needs to be solved, which we've all talked about, right? This is what happens. Well, you mentioned a couple of the companies you both invested. I'm really curious, are there any good companies or stories you want to share with us right now? Like, who are you currently invested in? You know, what's taking place with these companies? And of course, I'm really curious about this past weekend with everything that happened with SVB, and has it affected any of your portfolio companies, and how have you been dealing with that situation this past weekend? So let's talk about the good and let's talk about the challenge. And, you know, I'm just storytelling. I want to hear it all. It'll be good.
Do you want to jump in?
I'm happy to go first on a couple of companies. And I do think when you talk about specific companies in this space, it helps to really widen the aperture in terms of what we're talking about, oftentimes you say future of families and people think we're talking about consumer products in the home, which that is a huge portion of this, but we're also talking about healthcare. We're talking about B2B SaaS. We're investors in a company called Cocoon, which is streamlining the process for employee leave, including parental and sick and other forms of leave for employers, using a B2B SaaS platform to do that. So improving the experience of leave, especially when women, for example, are going out during some of the most important time in their life to begin their journey as a mother. So that's one. We're also investors in a company called Papa, which really is in the process of creating a whole new category of non-medical care and companionship for older adults who are aging at home. So they work with health plans to bring essentially gig workers into the home to help support transportation, grocery shopping, or even just to provide companionship. And they've scaled really quickly across all 50 states in partnership with every major health plan in the US. So those are two examples that I think kind of help to show the diversity of opportunity in this space. And maybe I'll stop there and then we can go back to this last weekend.
Yeah, we'll go back to that last piece. Yeah.
I'll tell you about two companies. I'll tell you first about Hop, Skip, Drive, which if you are in the LA area, hopefully you've heard of. And this was my first foray into this category. And I think, I love, Julia, what you're saying about just like showing how like the diversity of this type of investment, that it isn't just products, which is still a big opportunity. But, they were simply, Hop, Skip, Drive, Joanna from Hop, Skip, Drive was simply solving like a very simple problem. How do we get kids to and from school? And, they started this Uber type service for families in childcare. It was going very well. And then the LA City foster care system reached out to them. And I started digging in. I was very unfamiliar with the foster care system. And I found that when I ask any potential investors or most people don't know much about the foster care system. What you should know is it's broken. And these children are actually property of the government, which is the most terrible thing. No one should be property of the government. But even worse than that, in order for these kids to go to and from school or any opportunity they're given, they have to have government paid for and provided transportation. So Joanna McFarland from Hop, Skip, Drive started talking and digging into this foster care opportunity in LA. That was like $1 million account for her. She's now in 30 states providing transportation for children in the foster care system. The government is a bigger customer than the Fortune 500 companies combined. So as an investor, I was like, whoa, this is a huge opportunity. And while I don't want to be solely dependent on the government, I need to like dig into this space a little bit more. And, foster care is a big opportunity, but I think it's also a huge piece of just if once we can whittle away at that and really solve that, I think we can start to solve child care as a whole. And then the third thing Hop, Skip, Drive does is she realized, a lot of kids, whether you're in the foster care system or not, in the United States, were not getting to school because they didn't have access to a school bus. And so she collected all the data on school buses across the country, realized some were overfilled, some were empty, and some people didn't have access to one. And she now sells that data. So that's like 3 very separate revenue streams, all solving what looks like such a simple problem that really helps with this category of childcare, ed tech, anything in and around the home. And so that really got me in there and thinking about this as a whole category. The other company I want to tell you about, just to show the range again, is Babylist, which I mentioned before. This is technology. They created the largest baby registry. Hopefully many of you out there have bought something on it or used it yourself. She used to be at Amazon. She was like heads down building this thing, had only raised $10 million. And actually, when we met her, she came to us and said, hey, I'm about to make a bunch of money and I want to make it for women. And we're a female focused fund. We were like, okay, there's a little later stage than, we usually get in. Tell me more, what's your revenue? She's like, well, I've only raised 10 million. We're profitable and we're doing 250 million in revenue. Now, let me just tell you, the male VCs, because I see the world through gender, the male VCs' jaw drops. They're like, how did I miss this deal? And this is technology. They're now doing 900 GMV, 900 million GMV, which is absolutely insane. And she recently was like, this isn't the only tech product. They've acquired 2 companies. The registry isn't everything, and they're simply like selling products in this category. She created a new product. She's like, we were just testing it. We launched it 8 weeks ago. And it's basically something that you click a button on their site and get essentially a free breast pump, and they bill insurance. So anyone who's had a kid knows what a nightmare billing insurance is, how expensive breast pumps are. And they launched it 8 weeks ago. It's already doing 17 million in revenue. And let me just say, I wish all of my companies did 17 million in 8 weeks. And there's so much more that she's building. And so as a female focused investor on this category, and Julie, I'd be curious like what you have to say around this too, but I get a lot of pushback like, well, what are the comps in the market? Like, who are the big players? Like, how big can these companies actually get? And really the only comp people have heard of is care.com. And, you know, like they went public, then they went private, and people are very familiar with that. They have a really interesting tax business in addition to like matching nannies. And I think we need more proof points. And so for all of you out there, I mean, tell everyone you know about how big Babylist can get, because we're just scratching the surface. They haven't gone international. They're just talking about going public now. And, you know, when you tell people about these opportunities as an investment and a moneymaker, I think that does a real service for women and moms and families and some great dads out there. It's so important to just talk about this as an opportunity. So those are 2 I would share.
Can I just jump in? Jesse, and then maybe we can talk about this last weekend as well. But I actually think that question of like what other comps are out there, because I get that a lot. It's a bit gendered in and of itself. I'm like, do you ask the Web3 folks what comps are out there for Web3?
No, because there's been nothing.
Yeah, anytime you have a new category, and it's only really the last 5 to 10 years that we've seen any reasonable numbers of women in decision-making roles in venture capital. So it's like these things are just starting to get funded. So I always kind of flip that question back, and I'm like, what other spaces are you asking that about? Yeah,
I think that's key. You got to flip the conversation back and ask the question back to them. But you're right. Sometimes I feel like women get asked questions that the men aren't being asked. You know,
oh my God,
it happened. We know this. It happens all the time. I mean, we've seen it in pitch competitions. We've seen the pushback from the men in the room. You know, it's a fascinating dichotomy. But that's a whole. We could go on that tangent ever. Wait, ladies, we had the craziest weekend last weekend. I kept thinking about everybody who was at South by Southwest, and to have the SVB news, you know, happening within the 24 hours prior to that event. Were either of you there? I wasn't there. I'm
actually at South by right now.
Okay, so I'm so curious, like
over the weekend,
the energy, the conversations, you know, I'm curious, like how this news has affected your companies, and any insight you might want to share on what you think about it from the venture community, and how people are responding to, you know, this incredible, terrifying moment. The venture community in the banking industry. I mean, SVB has been a pillar for so long.
Yeah, I can start. I mean, it was such an incredibly scary and stressful 4 days. I think it's really easy for people to look back right now and say like, oh, the federal government was always going to step up. But it's like, when you are an early stage company and all of your money is sitting in that bank and you cannot make payroll, you have to think quickly to plan ahead. So we had a number of our portfolio companies with significant deposits at SVB. Starting on Thursday, we jumped in to help them kind of scenario plan and think through different things of, you know, what if they have 50% of that? Multiple of our companies had payroll coming up the next week.
Yeah.
So as I look back, I think there's a number of really scary things that happened and then a number of really good things. I think we saw just the way that panic can spread really quickly in this kind of social media, Twitter driven era. And I think that was scary to watch and be inside of and see in a matter of a number of hours, kind of panic spread around you. And, you know, at the same time, I think we also saw VCs and founders really step up, a lot of them, and support each other, you know, and put together, you know, notes. I was on calls with my co-investors, putting together notes to chip in any capital we had to help people meet payroll. So that was really nice to see, like, you know, who was around you that was going to step in and be helpful. I think like going forward, you know, and I'm curious what Jesse is hearing. I'm hearing a lot of conversations at the board level and across the founder landscape on concentration of risk and people really starting to think about diversifying their bank accounts beyond the FDIC limit. You know, I think that's an important conversation and makes a lot of sense. Unfortunately, I think that, you know, that might lead to a weakening of, you know, some of these institutions. We'll see what happens with SVB, but places that really have served the tech and venture ecosystem in a way that large banks would not, given the risk profile of these companies and firms. So I hope we get to a place where we continue to have SVBs in some form, FRB, others who really understand and support this ecosystem in very direct ways. I think it would be very unfortunate if we live in a world where support for the startup ecosystem is consolidated in the big four.
I mean, I completely agree. This was a real whirlwind for me. I was mid-travels and this all started happening. And when we started taking, I bank there personally, I bank there professionally. And when we started taking inventory of our companies and we got over 50% to over 50% of our portfolio was banked there, I started having a complete panic. And I was like, okay, stop everything. I was like working out of a hotel room, just being like, I can't get on a plane right now. I have to figure this out. And we were really leaning in, you know, helping our companies get loans. Similarly to Julie, I did have companies do layoffs on Monday just because there was a legal issue if you didn't pay payroll. Gusto and a few other payroll companies put word out a little late that they were going to give like a 72-hour grace period for payroll and still respect it, but not everyone saw that, and then not everyone uses Gusto and some of the larger payroll services. And you know, it really was like, I think also big tech's getting a really bad name. And you know, SVB supported so many small businesses, all the wineries in Napa. You know, I think this was really crazy. And for all of the small businesses that we're investors in, I mean, they just spent the last 4 days having a heart attack and not being able to focus on their businesses. And then the issue, like I'm still personally dealing with a lot of this, like I think the difference is for me now looking forward is like no bank loyalty. I'm going to have 3 banks and like, you know, be able to, I think the hardest thing for me was just opening up bank accounts that doesn't take 24 hours. You know, we were all calling in favors being like, who do I know at every single bank and like who can open the account fastest so that I can get my money out. And I didn't get my money out, so I couldn't even help my companies. You know, this was really, really a major crisis. And SVB, as Julie was saying, has been so supportive of this community in so many ways. They sponsor my fellowship program over the summers, and I was like supposed to be throwing an event with them tonight. And they, you know, this was just, to see something that was so big and had been around for 30 years, just overnight be like poof, gone, is insane. And then as Julie was saying, like you know, I actually feel much more terrified of the government. When the government took over, I was like, oh, great. Here we go. Like we're trusting the government to sort through these accounts. Fantastic. Like they're so organized, you know, like we are screwed. I'm never getting my money back, you know, and we had some uninsured capital there, some insured capital. But like, you're talking about like Roku had $400 million of uninsured capital.
Right.
Croft had $3.5
Wow.
billion of uninsured capital. Like, this is crazy. And it really was. And then I have all these fun conspiracy theories about it, where they just they felt like they had too much control over big tech or something. And so they wanted to just blow it up. And they did. Whoever that was, they did. But it's really devastating. I've been getting calls from my team at SVB. It's like they didn't even know what was happening. They're really great people who work there, and I feel for them. My contact, who's probably Julie's as well in Los Angeles, like, she's from London and her visa was just pulled. Like, she had to figure out, how am I staying here? I can't stay here if this bank doesn't exist anymore. And then she's like, I'm finding out in the press what's happening. They're not telling us anything. So this is devastating. I mean, the whole thing is really devastating. And it was interesting to look around at those who didn't bank there. And, when you feel like your world is crumbling, it's like very surprising when other people's isn't. I do think the government stepped in at the perfect time. I thought it was really interesting that they shut down Signature Bank, because on all of my VC communities and VC kind of text chains, we were talking about First Republic Bank shutting down next. And that was very likely. And I think that's why the government stepped in when they did. But if they knew that if First Republic went under, like, that's a much more, that's not just technology as an industry, that's everyone. And so they really needed to save that, because at that point it would have been contagion. But this was a real problem. And then to Julie's point about like moving forward, I think, I look at like this as a real opportunity. Fintech was a category, like consumer fintech, that we are investing in actively anyway. And I'm really excited to see what comes out of this, because people are going to figure out how to insure their capital in different ways. No one's going to keep more than $250,000 in every single bank account. We're going to see a lot more financial insurance providers pop out of nowhere, new banks. Like, I'm excited to see what new banks look like. I think people are going to get very creative, and I'm curious if right now, everyone's basically gone to one of the top 10 banks, but I'm curious to see if we end up having more of a relationship with smaller banks. And you kind of like know who's in that smaller bank community, and we're going to have a lot more of those pop up. I think there's real opportunities here for innovation. This was insane. Like, it was just, I feel like my heart's finally calming down. My companies are okay. We've gotten the majority of the capital out now, but I'm still waiting for, my 5th bank accounts to open now. I'm going to have just bank accounts everywhere.
I do think one of the things that you guys pointed out is how the community came together, and everybody was talking to each other. There was so much collaboration taking place, trying to problem solve. Nobody wanted to let anybody fail or go under. I feel like, from what I was seeing, there was a lot of that taking place, which is really hopeful and really good. So, as dire and difficult as this weekend has been, there are some good learning moments and some good things that came out of it. Do you feel like the venture community, especially among women fund managers, is typically collaborative? Is deal flow going between the VC funds? Like, how are you guys working together? And I know you know each other outside of this conversation, so I'd be really curious to know a little bit about that too.
I think what do you think, Julie? I think they're collaborative, because none of us are getting enough capital. So we have to work together.
Especially the emerging manager landscape, like emerging managers, like not across the board, but a lot of us, like, we know each other, there's a lot of us that are in Kaufman or different sorts of groups. And so we end up having relationships where, if somebody's fundraising, which, by the way, Jess, we got to catch up on your fundraise, we share information between each other. And, I think the more of us that succeed, that are raising small and medium-sized funds, like, it does kind of, raise all boats. I think across the venture landscape, there's a lot of variation, right? In terms of how supportive people are, how collaborative, especially kind of, bigger funds versus smaller funds, especially in this sort of market. But yeah, and within women, the women-led fund landscape. I mean, when I was thinking of launching a fund, you know, whether it was like Teresa Gow or Dana Settle, like I would sit in their office and say, like, this is what I'm thinking of doing. And they would take the time to talk to me and give advice, which is really great. So I think within the women VC community, there's a lot of support.
There's also like, I joke, there's like 5 of us and 2 are here, you know, so you all know each other.
It is a small community, although I've been excited to see the growth of fund managers, female fund managers in LA. And now that I've been doing more work in New York, I'm meeting a lot of female fund managers in New York. I think it is a tremendous opportunity, and it's a really interesting growth area. And, you know, Julie, we spoke at that event that we did in LA a few months ago, and we were sitting on a panel and we were talking about, you know, their Magnify had just closed their round, and the other fund that was on the panel was in the middle of the round. And Julie raised her hand and said, listen, after this panel discussion, we're going to talk because I've got some people you need to meet, which was, you know, that's the energy and the vibe that we need. It's interesting, in doing some research for today, Jesse, I found an article that we did on Worth in 2018 where you're quoted. I know. And there's a quote that you said, it's about elevating other women. If you're on a public board, pull up another woman and help her get on a board, which is a whole other topic and something we're very focused on over at Worth. And then make time to sit down with young women. You never know where one of those meetings is going to lead. And that really, you know, resonates with this whole conversation about collaboration and lifting each other up and all boats rise. I think when we help each other, when we work together, it is so beneficial. Why did you both become VCs? What made you want to get into venture? It's not an easy business. You know, like what was your passion and motivation behind this?
I think I didn't see enough women there. I'm a former entrepreneur, and I actually grew up in Silicon Valley around entrepreneurs and investors. And I didn't think I could be one because I was female. And so I went into entertainment. And I went into entertainment because my mom worked incredibly hard raising 4 kids, and my aunt was like a successful actress. So I thought, oh, like that's what women do. And I went to UCLA for their School of Theater, Film, and TV. And I came out of there, had a little success in entertainment, but I quickly was like, I belong in technology. This is like all I know. And so I kind of combined these 2 worlds, started one of the first tech talk shows back in 2008, which is hard to believe, but people like didn't care. And I had, the former CEO of Google on my show. And after 2 seasons of doing this show, and we built it out into a tech news blog, something like a Business Insider or something. And we were one of the first, tech news blogs to we were very like content first and video content first. So we were one of the first blogs to partner with Forbes.com on video and Mashable and all these tech news sites. But through that, I did 5 seasons of this show. After 2 seasons, I'd only interviewed men in tech. And I was like, I'm facilitating the problem here. Like, this is a problem. And I'm not seeing women like myself. And so I put out the vibe and I said, I call it the Batwoman signal. I said, I want women on this show. I'm like, I need women on this show. I need 50% women on this show. And they came. It was these early days of fashion technology. So I had like Rebecca Minkoff and Jen Hyman from Rent the Runway. I look back and I'm like, if I had a fund then, all these companies went public. I was like the first person to interview Dropbox. And it was just crazy. Jessica Alba.
You had your finger on the pulse, Jesse. You always have.
Yeah, always have. But that was really important to me to get these women media exposure. And then I realized I could help in another way, which was funding. So first I was finding them funding, and I helped find funding for companies, everything from paperless posts to Theranos, which is a polarizing conversation. And then I was like, you know what, there's something here. And I started writing just tiny checks. And one of those I sold on the secondary market for a 26x return. And then I had a track record, went and raised my first fund to continue doing this and investing in these women. And I saw this huge opportunity there, and it was underserved, and have continued to kind of push that along, and now kind of gone more on these like sector focuses. But there has to be a female in the founding team of 5.
Yeah. And Julie, you've been both an LP and a VC. So, why did you decide to go the venture route, and how did you get into it?
Well, when I was launching the venture capital investing arm at Pivotal Ventures, I was building out a portfolio of women-led venture capital funds, including some more established funds as well as emerging managers, and then also making direct investments. But I always kind of knew in my heart that spending my days working directly with founders to block and tackle issues, fundraise. I just got out of a 6-hour working session yesterday on fundraising and strategy. Like, that's what I want to spend my days doing. So was fortunate enough to have a conversation with my team and say, I love my work and this has been an incredible ride, but I'm ready to step out and launch my own firm. So it was really just wanting to spend my time working with founders and being very inspired, frankly, by the women that I was seeing around me doing that, including people like Jessie. We've known each other for years, and just watching people kind of do this. And I was like, wait a second, I have an idea. And it is kind of that thing, like, if you can see it, you can be it. And I was watching all these incredible women around me, and I was like, you know what, this is something I'm going to step out and I'm going to do. So that was the main reason. I think, more kind of macro, I think a lot about what the world would look like if women had more capital in their hands, and what we're missing, whether that's in biomedical research, whether that's in technology in the home. Like, if we had, more than 2% of venture dollars going to women-led startups, what would be the innovation that would solve huge problems that we're not seeing? And I'm very motivated by that on a daily basis.
So I love those answers, and I completely understand, because I find the world of venture so fascinating, and I do think that investing in the future is what we all need to be looking at. One of the things, Jessie, you said this at an event we were at last year, that in raising your fund, you were talking to, you have a very large community of women in Los Angeles. You know a lot of people, but there's still like an educational component, I think, about helping women start investing, and really, how do you get started? Like, what does investing look like? I think a lot of the women I talk to are more comfortable when they think about their portfolios in the public market, but the private market is a totally different thing. And, how are we encouraging women to look at getting into investing, whether it's, like Jessie, you started out just investing independently. Julie, I know you've done this as well. Looking at angel investing, collaborating with other funds to come together as women and start investing together. There's new SPV platforms out there that are enabling this opportunity. And then, how would somebody go about becoming an LP in a venture fund? Like, I really want to talk about this too, because I think we need more women writing checks and investing in women. And how do we encourage more women to do this?
It's, I love that question. It's such a hard thing. It's, I have 85 LPs and probably 30% are female. And unfortunately, that makes up a much smaller portion than the male investors, because typically what happens is women are less, they're afraid to take this risk. And this is a risky asset class. Like, you have to know that every investment is a risk, but every investment in the public market's a risk. Like, if you were in SVB, it's like, poof, it's gone. I think you can learn a lot by investing in a fund like Julie's or mine. We do a whole education for the women involved. I think investing in a fund as an LP is a great way to go, because, I have like Toni Ko from NYX Cosmetics is, she sold her company to L'Oreal for $500 million. And I pitched her with my first fund, and she had just made all this money. And she said, oh no, I'm only doing angel investing. And I was like, great, okay, like, no problem. And I went back, because, you have to do that. You have to be shameless. And I'm like, hey, raising fund two, just thought I'd check in. She's like, oh yes, I'm definitely investing, because I lost a bunch of money angel investing because I didn't know what I was doing. And so I'd say, by investing in a fund first, you get exposure to 20 to 30 companies. You get to know some of these. And when you're doing early stage investing, it's less risky as these companies get, 20, 40, 60 million in revenue. But when you're investing in very, very early stage companies, you can get in for a small check size, but you should look at it like, I'm going to take whatever I'm investing and divide it by 10, because 70 to 80% of those will likely go under. And, Sequoia has a 35%, they're planning on 35% of the money they invest. It's probably a lot more right now because of the FTX deal, but they just assume that will go under. And you really are betting on a couple to do well for you or one big return. You want to work with a fund manager because then they know how to pick them. They have much more intensive diligence lists, and you can kind of learn through a fund. And then what we do is we'll raise an SPV afterwards once the company's kind of bubbled up in our portfolio. And then you could invest directly if it was a company that interested you alongside us, which makes it a little bit less risky as well because it's slightly later stage and you're going direct, but they have some more institutional investors involved. But anyone, you have to be an accredited investor. There's a lot of regulatory issues that I'm sure, Julie, you're working on too, but it's really a nightmare. I want to prioritize women in my fund. But if I'm spending, 6 meetings meeting with, I used to just pitch all of these female philanthropists, and I'd spend all of this time with these, what I thought were billionaire women. And they would say, oh, I wrote a $3 million check to charity yesterday. I feel so good about it. And I'd be like, well, I'm on my 6th meeting with you. So what's going on here? And they'd say, I just don't understand. I don't want to make a bad investment. I'm like, first of all, I hope this isn't a bad investment. But second of all, how are you going to learn if you don't take that risk? The more, all of the women out there who are listening, make sure you're involved in every single financial decision that your husband makes or your significant other makes. Make sure you're there for every financial advisor meeting. Even if you don't understand it, the more exposure you have, the more you will learn. And we need you to do that so that Julie and I can be super successful and help, create more equality, because women are getting, as we were talking about, 2%, less than 2% of venture funding. And the wealth gap is so extreme, and we see it firsthand every day. And so as a female, you have a responsibility to make small investments, to, talk about women-run businesses, to buy female-run business products. I think that helps everyone, and seeing any woman's success is fantastic, because that means the next little girl who sees that, could be this entrepreneur and they didn't know any different. I'm on my soapbox, so I'll step off for a moment, but.
We're grateful you're on your soapbox. You've been pushing these conversations for years, and it's much appreciated.
Yeah, I'll just add to that. I think I totally agree with Jessie. Even being a small check into a fund is an incredible way to learn. And a lot of times, if you have the conversation about minimum check size and, can I still get in? I want to learn. People will be flexible in a lot of cases. We did that to provide a syndicate of women access in our first fund. I also think it's about having a balanced portfolio, right? Anybody who's going in, I'm going to be all in on venture from the start. That's not a good approach. You have to sit down with your financial advisor and decide how much risk can I take at this particular period of time. And also having a portfolio, I'm sure this happens to you, Jessie, all the time, but I have friends who come, they're like, oh, there's this company that came in my inbox and I'm going to do this one. And I'm like, don't do that. If you're going to do this, you need to have a portfolio and step back and say, this is the number of investments that I can make approximately over that period of time, and really look at it like that, not just you're going to make one investment and that one investment is going to make you rich. Because this is not how it goes. I also think there's a lot of communities and groups. I know, once people get started, if you can join an angel investing group, and there's many out there. Jessie and I are both part of Broadway Angels, which is an example of one, but there's, many that have hundreds of women where you can really sit down and learn from others. And I think that's a really good way to get started as well.
I think that's terrific advice. That's great. I'm wondering if we have any questions from our attendees today for Jessie or for Julie. I know we've gone over a lot of different topics and we've covered a lot of ground, but always good to see. I always look forward to seeing you guys in the community here in Los Angeles. We're always doing so much, and our venture community here is so strong, and the collaborative spirit is a wonderful thing to be a part of. I want to thank you both for being here today. Thank you so much for your time, for your expertise, for the work that you're doing to push this agenda forward, for investing in women, for investing in each other. I think it's so crucial. And want to make sure everybody knows to follow you on LinkedIn. You're both posting regularly there. I know there's a lot of information. Jesse's very active on Instagram. You can always follow Jesse as well. Check out their companies, halogenvc.com, magnify.vc. And Jesse, you have a podcast as well. Is that right?
Yes, I have a podcast called Monumental, and we're trying to just honestly learn more about childcare as an industry. And so we're interviewing great moms, dads, leaders in childcare, politicians, and just kind of get everyone's gauge on this as an industry. So please listen.
Well, we'll be following. We really appreciate everything you both are doing. And thank you for your time today. For everybody who's attending this Leading Voices session, we hope you'll join us on April 5th. We're doing these now on the first and third Wednesday of the month. We're going to continue this topic of investing in women, and we're going to delve into democratizing the process with Kelly Arena from Golden Hour Ventures and Hallie Kaplan of Sidecar. I'm really excited to introduce you all to Sidecar and talk a little bit about that. And be sure to be in the room with us live in person on April 26th in New York as we convene for the annual Women in Worth Summit. We look forward to seeing everyone there. And thank you again, ladies, for your time today. We really appreciate it.
Thank you, Laura. Thank you for everything you're doing for women investors and founders and the community in Los Angeles and beyond.
Thank you.
Thank you so much.